Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is David Nicol, CEO and co-founder of LedgerEdge, a blockchain-based, decentralized corporate bond market trading and investing network that spans the United States, the United Kingdom, and the European Union. Its goal is to incentivize its users to contribute price information and liquidity to markets which have historically lacked much of either. David, thanks for joining us.
Thanks for having me, Dominic.
Now, as I indicated in my opening remarks, you're actually trying to do something which is very hard, not just because the corporate bond markets are illiquid and as a consequence short of price information, but because the status quo isn't going to change overnight. So how do you go about transforming what's historically been an illiquid, bilateral, opaque, telephone-based corporate bond market into something which is liquid, multilateral, transparent, and digital?
Well, thanks so much for having me, Dominic, again, and thanks for everyone who's watching. This is a great opportunity to be able to talk a little bit about the future of this industry, the future of finance, and I'm really happy to be here. I'm glad that you said it's a hard thing because we certainly had a lot of fun over the last few years building LedgerEdge. It doesn't always feel hard, especially because I think that, as you say, much of the market right now goes over phone, over chat messages. It's not fully electronified, but that said, our client base is, I believe, the very best in finance. We have a bunch of really fast-thinking, innovative users, market participants who want to look at the future of this industry. They want to participate in the next wave of what's happening in corporate bond trading, and we formed a great partnership with them. Now, the second point I'll say about the corporate bond market changing overnight, people look at the major incumbents in the space and they say, well, those are 25-year overnight successes. It certainly does take a lot of foundational work to build into the next evolution of finance in general, capital markets in general, but secondary trading especially, because it's a network-based business. You've got buyers and sellers, all of whom need to be connected. I think it's the most fun type of business to build, but there are certainly a lot of complexities to work through. Right now, the market has been successfully moving toward more and more electronification of trading. Right now, about 30% of U.S. 30% of U.S. high yield bonds trade over electronic platforms each day, and 40% of trades in high yield instruments trade on electronic platforms. The vast majority of the rest of those are chat messages or phones. And in fact, I spoke to someone 2 weeks ago who had recently executed a bond trade on a fax machine, if you can believe that. And that really still does occur. So we're very happy to be building into a market that knows about electronification, is happy to look at electronification, happy to start moving toward more electronification. And we're providing new and fundamentally different experiences, capabilities, and fundamentally better execution quality into the corporate bond market. We do that with distributed ledger technology, which we'll certainly get into here. But the point for LedgerEdge is that we're working with institutional markets. We're giving them more data control, less data leakage, and in the end, fundamentally better execution.
Funny enough, I can believe the fax machine story. You can be grateful it wasn't a telex machine. But I'm just to elaborate on one aspect of the question I asked. It's obviously going to be, you're working with all these firms, and that electronic trading is going up, particularly between the professional institutions in the market. But there's going to be a transition, isn't there? You're going to have your market alongside the existing market for quite a long time. Have you thought about how long that process might last, or how you manage your business through that necessarily probably quite lengthy transition?
Yeah, great question. I think it's, I agree with you that it's a fallacy to think that everything will move to an electronified trading regime overnight. Really, it's all dependent on the trade circumstance. What we hear from the market is that outside the top 2,000 most liquid instruments, and outside of those trades, or any trades that are larger than 2 million in size, the lack of liquidity, the lack of information transparency means that it's quite difficult to get those done without going to the phone, without talking to a contact. And so I think the real key here is about understanding the nuance in each trading situation. It's not simply expecting everyone to push everything to electronification immediately. the key for us is that we start with a strong collaborative customer base. We've worked with 18 sell-side firms and 21 buy-side firms in working groups and advisory councils and onboarding sessions over the last 2 years in order to make sure that we're building a solution that really provides a better experience, not just a fancy new product. That kind of base of liquidity and that base of interaction will be really important as we move toward that digital future. And I think the last point is that LedgerEdge needs to, and anyone in the market really needs to offer a bridge to this digital future. We can't expect that it's all going to happen overnight. So, you know, you need a secure place to start trading more electronically, a secure place where your data is protected, and a place where you can start to access this electronic and more flexible, more movable, more liquid market with real protection, real control over who gets to see your liquidity, who you're engaging with, and how you're engaging with them. And that especially means that you need to protect those relationships, as we saw through all the periods of volatility, March 2020, and the last few weeks with everything that's going on in the world right now. The value of relationships and the value of being able to pull on direct relationships in the market is critically important, especially in periods of this volatility.
Mm-hmm. Something that caught my eye is that you have described your approach as DeFi, which excites people like me who think that that's interesting experiments going on in DeFi markets. But what does DeFi mean for you and for your prospective users, these buy and sell side firms you're talking to?
Yeah, there's so much happening in finance in general and in the world of DeFi. The trick for LedgerEdge is that we are bringing such new and great capabilities to the market, real experiences and real differences to the market. We have to make sure that those are consumable, understandable, adoptable, ready for our users who are using the platform today, while also, you know, opening up this world of the future of the market. This company, we've been around for 2 years, but the idea has been in germination for over 5 years. We know that the markets are moving toward a new electronified future. We know that the digitization of assets is going forward in terms of issuance, asset management, and indeed trading. And we're harnessing all of those innovations. For us, the technology that we use is best described as distributed ledger technology. We've taken the core ideas of distribution, the core ideas of distributing risk, cost, and control, instead of putting that all in one single central database with one single central owner. What we do is we give all users ownership and control of their data. We give them the ability to interact with the market from their own point in the ecosystem. And then the key question for us is, how do we make sure as a technology provider and as a market operator that all of those points, all of those market participants see the correct version of the truth? To answer that question, to solve that challenge, we use distributed ledger technology. And that allows us to decentralize that control, give users full ownership of their data, but making sure that they all see the right version of the truth at the right time for them.
Let me talk a bit about the sell side in particular, the traders that you've referred to. What exactly does LedgerEdge enable those traders to do, in particular, what stuff they can't do now?
Mm-hmm. Well, everyone in the market, Dominic, is looking to do more with less. Of course, the buy side's looking to gain alpha, find alpha through any kinds of use of their portfolio, use of their assets, use of their balance sheet. The sell side is trying to answer more and more of those customer inquiries, deal with better service to more and more counterparties without as much use of their own balance sheet post 2008. So the key here is that LedgerEdge allows traders to do more with less. It allows them to deploy smart orders. Now smart orders are a really important innovation that we're bringing to the market. Smart orders are any kind of interest. It could be a direct order, it could be an indicative order, it could be an AX or an indication of interest, or even a holding. But these smart orders have reveal conditions attached to them. Those reveal conditions only allow that order to be revealed to the right other counterparties in the market. That could be based on their identity or based on what the other side is showing into the market. So to your question, what this allows the sell-side trader to do is that it allows a sell-side trader or a sales user to identify even better opportunities to distribute axes, to find opportunities to trade, to make use of limited balance sheet, and to answer and serve customer inquiries, which is critically important. With this resting order concept, this resting smart order concept, they can deploy these orders into the market and have them rest there without having them revealed to the entire market, such that their own edge, their own data advantage is given up. The last thing I'll say is that it also allows the sales side user to distribute their streaming quotes and their axes in a very direct way from the sales side user to the buy side. So instead of having to go to a massive distribution list, they can share directly to their counterparties. And that's back to building and enhancing that relationship, which is so important in this market.
Now, those smart resting orders you referred to sound like a pretty crucial innovation. As we said at the outset, these corporate bond markets are pretty illiquid. And one of the problems is that information leakage you've just referred to. It causes the price to move against you. So perhaps elaborate a little bit on that, on how you're solving that liquidity, move the price against you problem, and perhaps thread into it how being based, as you say, on distributed ledger technology enables you to create those resting smart orders that minimize the market impact.
Yeah, absolutely. When we started working with the market, we wondered, are we really building a new solution which is truly differentiated from what users have today, and will it provide actually a better outcome? And what we heard was that anytime, as I said, you go outside the top 2,000 names or above 2 million in size, anytime you put an interest into the market or even do a search, the price moves against you. And our question was, why haven't networks been built to allow users to get over this challenge? Really, it's about one side of the market asking for a price, the other side giving a price. This shouldn't be too hard. And what we found is that the only really networks where users can have that interaction are these centralized, fully controlled networks, where the market operator owns and controls the data, and where they then take that data and sell it back to the users. It's a really important part of their revenue picture, and it's a great innovation. If you're evolving from voice trades, from, as we said, fax trades, it's a big step forward to put all of that into a kind of a hub and spoke model. However, it has its thresholds, and that's what we're seeing now. And so, to your question about how we solve that problem, we give trust and control back to the holders of the data, making sure that they own and control their data. LedgerEdge doesn't see the data pre-trade, and they can share that directly with others in the market without having a middleman step in the way and own any of that very valuable pre-trade information. You don't have to kind of share data in order to see anything here. You can interact with the market based on very limited interest, and then start the conversation that way. And for LedgerEdge, we're simply building the rails. We're building the connectivity for how these users interact with each other, and we take an approach of giving the users their data control and their economic and beneficial ownership of it. And then going forward, that will evolve, and the network will have more value just by way of that connectivity and that interaction.
Do those benefits, the low profile, the limited information, the data sharing, do those apply to the buy side, the portfolio managers, in the same way, or do they get different benefits out of LedgerEdge?
It's a slightly different value proposition to each side of the market. And it's so important to think about this market with all the different users and the persona types that need to interact with the market, definitely. So the way we think about the buy side is that they have challenges to deploy capital, allocate resources, make portfolio changes in a changing world, intense market structure demands, and a lot of work to do. And so we need to make this as efficient as possible, but also give them fundamentally better opportunities. So the users we think about on the buy side are the portfolio managers, the analysts, and of course the traders. And what LedgerEdge has what we found ourselves doing is really providing a critical tool for traders and portfolio managers to work really closely together. Because right now the portfolio manager knows perhaps what they want to do with the portfolio. They want to move out of something into something else, or just add risk here, take away risk there. Then they need to work with the trader to understand what's liquid, what's available, what can they actually execute in the market. Now, with LedgerEdge, our data control concept and our smart order concept, it allows those two parties to work together really well. It allows the trader to tell the portfolio manager exactly what the liquidity picture looks like. They can uncover new and better opportunities because of these smart orders that open up new opportunities for the portfolio managers and the traders to do more work in the in their risk moves. And then finally, it was actually the buy side who came to us and said, we love this kind of this conditional order concept, this reveal condition concept. We'd like to use it not just for orders, but for our holdings as well. So that for parts of our portfolio that we're looking to either add risk to or take away risk from, move out of risk, we can put that into the market without a specific explicit order being there, and we can start to uncover new opportunities and kind of advertise our holdings more to the very right portions of the market where we can actually get some business done here. And that's totally new for the market. I'm really excited to see how that works, because I think there'll be a lot of new and different trades, and that includes trades that start at a high level. Perhaps the user doesn't know exactly which name, which security they want to buy or sell. You can paint this at a higher level, do a search for a category of risk, and then start to find opportunities within that category. Dominic, this is the type of innovation that's been around in retail, internet, Google searching for a few decades now, and I think applying some of these same lessons of a fundamentally better searching experience and data sharing and data finding experience is what we're bringing to the corporate bond market.
Mm-hmm. As you yourself say, there are multiple personalities at work in the bond markets. We've talked about portfolio managers, we've talked about traders. We haven't talked much about what you might call the primary market people, the syndicate desks, the investment bank sales people. What are they going to get out of LedgerEdge?
It's a great question. We get this question quite a bit. They say, are you also working in the primary market as well? Or are you totally focused on the secondary market? And the answer is that right now, we're very focused on the secondary market. There's so much work to do in the secondary market. These are bonds already issued where users need to trade these securities from one party to another, having already been issued. Now, that said, there's a huge opportunity to interact with the primary market where there are actually wonderful solutions being built today. These are digital issuance solutions. These are new kind of syndicate improvement platforms. And it's a very exciting space at the moment. A lot of the value in the primary market is knowing the picture of what the secondary market looks like. Where is the demand? Who's going to buy these securities? Which investors are interested, these kind of questions. And what LedgerEdge can do is, again, through this intelligent data sharing network, interact with these primary market solutions to share that kind of liquidity information with those primary market operators. And this is always, as I said before, the data is owned and controlled by the secondary market participant. So they will have to opt in and directly share this information with the primary market. But if it's about something that they want to buy or some interest that they have, this will be in their interest. Now, post issuance, there are lots of other personas on the sell side, like salespeople, kind of client coverage desks. And what we've heard from them loud and clear is that they're trying to cover more and more client requests with fewer people and less balance sheet. Well, being able to identify the right pockets of the market where liquidity is looking for a home or looking to move will help them be even more effective in their job. And those users on the sell side who are able to deploy smarter orders with better data, those are the ones that are going to be able to succeed.
Now, you're interacting with the various interests in the marketplace, both formally and presumably informally as well. And I guess you have to be pretty disciplined about which ideas you accept and run with and which ideas you reject. But are there some obvious facets of the platform which you have, maybe network is a better idea than platform, the ecosystem? Are there aspects of it you've modified in response to feedback from the potential users?
Mm-hmm. I'm so glad you called it an ecosystem, Dominic, because that's exactly the mindset that our users have, and that's the mindset we have as we build this network of participants. And as you say, from the beginning, we've had a great collaborative experience with the market and customers in the market who I think are the very best in the secondary market. Hugely innovative, full of ideas, and of course, as I'm sure many people know, they're not shy, not unwilling to share their opinion. So we haven't had to beg for ideas. We haven't had to ask for feedback. We know that comes pretty quickly. And so that's the way we've built this. It's been engaging, collaborative. We started with working groups in 2020, and we've now built a system in collaboration with these parties. So some of the feedback we received initially from the sell side, where we kind of started our conversations, was about direct connectivity and about execution fees. On direct connectivity, the question was, well, look, the costs of integrating and connecting to an ever-growing list of clients is really becoming very difficult for us to support in the context of a trading business. So, can we use LedgerEdge as a way to intelligently share streaming quotes with the buy side? And as a new platform, building this connectivity from the ground up and not taking ownership of the data through that process, the answer was, of course, yes. And so we built that into the system quite quickly. On execution fees, they've only gone one way in the last 10 years, and they've evolved from a voice broking model. So we've been able to put out a premium product at a very competitive price, which is obviously something the market loves. On the buy side, I've already told you about their desire to share holdings with the market in a way that's very controlled and allows them to uncover new and different trading opportunities and also enhance their relationships with the sell side. The other thing I'll say, though, is that they've provided a lot of feedback on our user interface. It's called the LedgerEdge Oracle, and it's a very new and different look at a visual depiction of the market. It visually shows liquidity in the corporate bond market, which is something, the idea of a visual picture of liquidity in the corporate bond market is not really something that corporate bond traders at least have seen before. They see one price on an asset, but as this market electronifies, as it gets more liquid, that kind of very compelling visual picture is really, really important. So there's a lot of feedback we get from the market. It's an ongoing process, and we have a pilot launch coming up in the UK where we'll get even more feedback from the market. And the whole focus for us is being inclusive, being flexible, and building on a modern tech stack, which helps us incorporate all this feedback in real time.
Now, talking of connectivity, not in the sense of being able to reach a wider range of counterparts, but just literally interacting with LedgerEdge itself. Mm-hmm. Are you expecting your users, or are your users expecting themselves to run their own nodes? I mean, this is a distributed ledger technology. So will they run their own nodes, or will you have to operate all the nodes for them, at least initially?
Yeah, what a great question. We have a few requirements here. One is that as a regulated platform, we need to be able to answer the questions of market abuse, manipulation, fraud, all of that for the regulator. And then we also have the desire from our customers for this market to move much faster than it has in the past. Our system can move at thousands of transactions a second, which is way beyond most purely decentralized, blockchain networks, for instance. And so we are offering the service from the cloud. It's managed from the cloud. And we use a middleware technology, a DLT technology called Corda, to make sure that all the nodes in the cloud environment are fully firewalled off from each other and fully private to the customer. The distributed order book is what we call it. Each picture of the order book is held at the node, and then the customer accesses that node through an API, or as I said, through the user interface, or some combination of the two. And all of that works at thousands of transactions a second. So it supports the speed and the latency and throughput requirements that our customers demand. Now, going forward, if customers want to own and control and operate their nodes on premises, it's very easy for us to build that in, kind of adopt the architecture for that. Currently, none of our customers are asking for that. And I think that's telling in kind of secondary capital markets where the demand is and what the real requirements are.
Yeah, and I suspect one reason they're not asking for that is they've got legacy technologies which they're not ready to dispose of at this point, which raises a question specific to the buy side, hooking them up to the network. They'll all have historic order management, execution management systems. How are you going to join them? I'm talking here purely, I suppose, of the buy side, but you may have a variant of this problem on the sell side as well. Mm-hmm. I noticed you had a relationship with Transfic. I wonder if they fitted in somewhere in that connection to the buy side area.
Yeah, the integration to customer systems is critically important. I said earlier, part of our challenge is helping all of this be very adoptable, very user-friendly, while also being very powerful. We describe this like sitting in a new car, maybe a Tesla, where it feels a little bit different, but you kind of know where all the controls are, but you know it's different, and you step inside and everything just works, and it goes faster than you expect, and it burns less fossil fuels than you've ever seen before. It's just a great experience, even though it's something totally fundamentally new and different. And that's kind of the approach we're taking here. What that means in trading world is that we integrate to customer systems. Those are proprietary systems, so pricing engines, RFQ responders, AX production engines rather, on the sell side. And Transfic is a really important part of that. Transfic and Ion are two of the really important sell side order management systems and connectivity layers that we're working really, really closely with to make sure that our trading ecosystem can access and can interact with all those client systems. On the buy side, we also are integrating with all the major order management systems in the market. We recently put out a press release with Charles River, which is a great forward-thinking firm. There are others coming up, folks like ThinkFolio, SimCorp, and then of course other big companies like Aladdin or Bloomberg. And it's some people say, is it just a necessary evil that you have to interact with these client systems? And the answer is no. They've solved a lot of problems for a lot of the market. And it's really a benefit for us to be able to work with these organizations. And we simply see ourselves as providing that connectivity layer between firms and critically regulated institutional grade execution capabilities.
Now, how important are APIs? There's obviously going to be quite a lot of data flowing around this ecosystem. How important are APIs to what you're trying to do?
Yeah, the importance of APIs in the market has only grown in the last 10 years. And I think we're benefiting from the fact that it's now quite standardized. And it's relatively easy for us to build an API interface, which is easy to integrate, easy to use, easy for tech teams to work with. So we have a Fix 4.4 API. It's very easy to integrate. It includes all of the services and all the functions that our platform offers. That is also the basis for our integrations with those client systems that I spoke about. We've got 3 or 4 different ways to interact with the marketplace, whether that's through Excel add-ins or direct API connectivity or order management system integrations. So the API is super important, and I would just say we definitely benefit from the fact that those are quite standardized at the moment.
You mentioned a few minutes ago that electronic trading is increasing as a proportion of activity, particularly in the high yield markets, if not in the plain vanilla corporate bond sector. And of course, you're not entering into, you're not creating this new secondary market ecosystem in a vacuum. There are electronic trading platforms out there already. There's Bloomberg, there's TradeWeb, there's Market Access, there's LiquidNet, and so on. Where do you see yourselves fitting into that existing universe of electronic trading platforms?
Yeah, we feel really happy. We feel very secure in the fact that the market has benefited from an overall electronification trend over the last 20 years. And companies like MarketAxess, TradeWeb, and Bloomberg have done a wonderful job of moving trades and interaction from the phone to voice, or from the phone to online electronic interactions. That market is still somewhat limited, based on the ownership of the data, the fundamental architecture of these kind of, let's call them Web 1 or 2.0 companies, which have done a phenomenal job. And we have tons of respect for the people and the products at those companies. And we're simply, building the next generation of electronic trading functionality. We're building our systems from scratch on new technology, rather than having a large backlog of things that we built, from 2000 until now. We get to kind of build everything from scratch now, which helps us solve a lot of problems right up front, and most importantly, move really, really quickly. We've been able to build a fully functional trading platform in under a year, with new compelling features that have been that customers have provided input on, and we're regulated by the FCA, all in under a year, which is a wonderful achievement. And I think that speed of innovation is what we're seeing across markets, not just in trading, but across markets all over the world. We're seeing that the ability to innovate, listen to customers, build the right systems, the right solutions for what customers are telling you, and then deploy that in production is the biggest determinant of success.
Now, one of the things that a successful secondary market is going to throw off is a lot of information, price information, order information. And for the market itself to work properly, particularly from a post-trade perspective, you're going to need reference data. Is there an opportunity in what you're doing to create a stream of revenue from data? Is there a data opportunity in corporate bond markets for you to supply not just price information, but maybe data analytics to people as well? Is that part of your thinking?
Yeah, data is a really exciting part of this market, because it's critical for the increasing liquidity in the market, increasing electronification, and we start from a very different approach, right? By giving users ownership and control of their data, we start in a very different point, and that different starting point is critical for the evolution of a data product or a data service from LedgerEdge. By starting from that point, we're allowing users to opt in to data services rather than having the default answer be that LedgerEdge owns and controls the data and then sells it back to the user. We think that model is kind of broken, and we've seen that change occur in other markets as well. You look at the Memex exchange in equities, where the user base owns the data in the ecosystem. And participates in the upside. So this is what we'll be putting in place with LedgerEdge. We will design and offer data products to customers, but they will share in the economics of those data opportunities. They'll share in the revenue derived from those data services. And the other thing we'll do is we'll build a product called QMA, or Quantified Market Activity, something we're really excited about, because it's a way of designing incentives in the market that look at user behavior and data input and extraction into and from the system, which show who's adding real value to the ecosystem, who's taking value from the ecosystem, and then allowing us to, in a really nuanced way, incentivize positive activity in LedgerEdge, such that those who are providing high value data into the system will actually see some benefit from doing that. It's a totally different approach, but it's definitely the future for this market.
It certainly is a different approach to give the users some reward for the data they help to create. And that's an idea which is taken, I suppose, directly from the world of DeFi. Have you worked on how you're going to do that yet? You're going to start issuing tokens to users, or is it not? Are you going to use some more primitive method, or you haven't thought through yet?
Well, it's a great question. Like the rest of our innovations and the features we roll out, we'll be working really closely with our customers and our strategic partners on this. We've been encouraged by some to look at a token model, and maybe that is the right one, but really it's going to be the very best solution for our customers, and it's going to be directly targeted at incentivizing users in the right way, which it's going to be achieving that rather than working through some kind of token economic scheme that's built to raise funds or raise capital. It's a very different proposition.
And you made clear that it's about rewarding the ones that add the most and rewarding less the ones that tend to take value away. Could we talk a little bit about the technology that you're using? You've referred already to Corda, and because LedgerEdge was founded by David Rutter, the R3 CEO, it's not surprising you're using Corda, and every user has these nodes where they can look at their own data. But what other technologies are you using in creating the ecosystem?
Yeah, one of the advantages in building the company now, building the product now, is that we get to build on lots of technology that is third-party provided, or open source technology, or IP that is owned by us. We can do that in a really flexible way, which allows us to take advantage of lots of new innovations in the market without being kind of held back by a legacy technology stack. So yes, we use Corda as part of our tech stack. That's a middleware layer that helps organize transactions and flows between nodes. It helps everyone see the right version of the truth at the right time. But we also use we partner with cloud service providers who allow this service to be offered at low latency and full connectivity. These are firms like AWS or Equinix, where much of the financial infrastructure is located in the world. And then we work really closely with a software development firm called Yala Labs, a wonderful firm that does much of our development. We have a testing firm as well, which helps test this technology. We have pricing engines and pricing libraries from other partners. And then, of course, we have connectivity partners who help us connect to all of these customer systems. This is all outside of the kind of the core IP that LedgerEdge is bringing to the market with our designs around data ownership, smart orders, and of course, trade execution. So it's there's a lot going on in a quite complicated architecture, but we have folks on the team and in our partner base who have built systems as complicated as this before. Maybe not quite as quickly as this, but it's been great to have others who have done this before at the table as we've gone from design to production and implementation in just about a year.
And Zero Beta in particular, what role are they going to play in the model?
Yeah, Zero Beta are one of our wonderful partners. They have built some integrations for us. They provide some pricing engines, pricing libraries, and pricing functionality for us. As we ideally in this market, you want to give users as much data around the trade as possible. They help us provide a reference price around assets in the market. But I'd also mention that we're working with firms like Yala Labs, as I said, and the order management systems. Charles River and you've already mentioned Transfic. We've talked about some of the others, Ion, SimCorp. We'll have more announcements coming back or coming out soon, rather. But this kind of partner ecosystem is critically important to our success.
And one of the technologies you promised to use at the outset was artificial intelligence, AI. And where has that got to? Are you using it, or you plan to use it? And what role would it fulfill?
We absolutely plan to use it. And artificial intelligence covers a wide range of capabilities, from very simple machine learning up to true learning, artificial intelligence. And we see this as a ramp up. We don't need to. We're not looking to build something simply for the marketing buzzword. AI, machine learning, will provide a really important capability as we help users see feedback from the market. So, one of the questions that users have today is, when they put an order into the market, or when they go into the market with some interest, what happens? Are they seeing all the liquidity that they should? Is there anything that they're missing out on? How could they change the way that they're interacting with the market to see an even better picture of liquidity? Well, that system is actually quite easy for us to build. It's kind of in draft form. The placeholder name is the near miss service. You want to know exactly what your near misses were. And so this AI capability will take the user's order, see what they've missed, what they could do to improve their order, and then offer suggestions back to the user on how they could see even more liquidity, how they could get more business done, or otherwise improve their execution quality. Now, that could be easily done with a team of analysts and an Excel program. But again, one of the benefits we have of building now is that we get to incorporate some of these great machine learning capabilities to improve those recommendations as the market evolves.
David, one final question for you. You mentioned this idea first came into your head 5 years ago. You've done most of the work in the last 2 years. As you said, it's moved along very, very quickly. You've got a pilot in the UK this year. You've got plans in the US and Europe. How would you describe where LedgerEdge has got to and where you expect it to be in the next 12 months?
That's a great question. And I don't know if I'll be so bold as to describe 12 months from now with full clarity. We of course have a very good idea of where we think we'll be in 12 months. And I expect, like with most startups, the world will look somewhat different, and probably, even better than we could hope at the moment. I will say that we've benefited from a wonderful team of professionals. We have a great group of people here working at LedgerEdge, building the future of digital markets. We have a great group of customers who provide wonderful input into the product. And they're really bought in to the future of this market. And they really, you can see their eyes light up when they see a new and different capability, which will help them get their work done on a day-to-day basis. And we've gone from, as I've said, we've gone from design to fully regulated implemented system in just about a year. And now we're onboarding with over 50 institutional customers, some of the largest in the world. And that connectivity will provide a great starting point for an ecosystem approach to corporate bond market liquidity, which is a changing market. It's electronifying. It's getting more liquid, more digital, and more exciting every single day. Corporate credit's a super important part of the market. It forms a really important part of pensions, asset management, and the balance sheets of many, many corporations and investment firms. So we're really pleased to be able to work in such an important part of the market. I think in the next year, we'll see even more customers on board to the platform, more and more liquidity being added to the platform. And like any startup founder, I'm going to tell you that things will ramp up in a smooth and even journey to full success. But I think the more realistic approach is that things improve slowly, and then more and more quickly than you even think. And so I'm excited about the future because our customers and strategic partners have been encouraging us to look at what happens when corporate bond markets are more efficient. What other markets can we look at? What's the future of digital assets in this market? And that's one point I'll leave on, which is to say that over the next year, I think in corporate credit in particular, more assets will be issued on digital platforms. More digital assets will be managed digitally throughout their life cycle, and they'll be looking for a secondary market ecosystem where they can interact with other market participants for pricing information or for movements from one party to another, trades. And I'm excited because LedgerEdge is the very best place for them to do that, and we're having a lot of fun.
Mm-hmm. So I said that was my last question, but you've just prompted another one in my mind now. We kind of think of the bond markets as they exist today transferring onto this new ecosystem, but in fact, as you've just pointed out, they're going to be these sort of native digital bonds are being issued already, and they're likely to increase in volume and number. So you're sort of well positioned for that as well. So if I was this really is my last question, if I was a sell or buy side firm, I thought, well, I'm very excited by this, both because I can see existing business transferring to it. I can see I've got to find somewhere to trade these native digital bonds. How do I get involved, and how soon can I start using this system? Is it I get involved in your UK pilot today and your US pilot tomorrow and your EU pilot the day after tomorrow? Is that the sort of schedule we're looking at here? How do I get involved if I'm one of those firms that would like to get stuck into this?
Absolutely. You can get involved right now. For better or worse, it takes any institutional trading party at least a week to get onboarded to LedgerEdge. We're trying to move that as quickly as we can, but maybe that will be for a future startup to improve the speed of onboarding with firms. But no, the way to get involved is to reach out. You can email me directly at david@ledgeredge.com or info@ledgeredge.com. And the UK pilot will launch at the end of April. That's when trades can be done live on the platform, but we'll be working with users to bring in liquidity to the platform, gather feedback on what features they might need to work even better on LedgerEdge, and then providing data back about what they're seeing in the ecosystem. Then the US launch will be shortly thereafter, probably in midsummer, and the EU launch shortly after that. There's lots of information available, which we happily provide to anyone who's interested. And of course, the very best way to see how this works is to come and see a demo. So please do reach out and get involved.
David Nicol, I must let you go. Thanks very much for taking the time.